Hey guys, in this video, we're going to go over the differences between stocks and options and the disadvantages and advantages of each. I was kind of going through our channel here and I was seeing, I felt like we were missing something. And I realized we didn't really go over the basics of just kind of the difference between stocks and options and what their pricing models kind of each mean to one another or to themselves separately. So we did kind of gloss over this in the Greek series. You can find that on the YouTube channel as well in the educational playlist. But really, we're just going to give a quick little overview here of basically the differences between your stocks and your options. Now, we're going to take Tilray, for example, here. You can see that we're currently trading right here at 1300 or 1300. We're trading at 1360. Okay. And what does that mean when we're looking at that price? Well, we're looking at just a basic stock price. That is a reflection of that company. Okay. And really, with that stock price, we have tons of things that are already built in: health of the stocks, guidance, speculation, etc. Everything is already built in. Everything is already where we need it to be. Okay. So even if we do have some expansion to the earnings side, like we're looking for a run up into earnings, or we have a news catalyst coming up, this price will go up accordingly or down accordingly. And as soon as that um, catalyst happens, or it doesn't happen, or whatever, it'll revert back to its mean, or it'll go up, etc. But it's going to tell you everything that you need to know as far as what's inside of the health of that company, and the stock, just the speculation underneath that stock as well. The difference between this and just buying an option, say if we were going to buy a $14 call here, we know how to buy calls now. We're going to be in the August cycle here. We're going to buy a $14 call. The call here, we have no intrinsic value whatever, and there's tons of outside factors. We don't really know what this is worth, right? So technically, we can kind of guess because we have different IV. We can look at the IV rank. We can check out our theta, delta, etc. But it's all more or less just speculation upon more speculation. So we don't really know what this option is worth. Now, the good thing about options, though, is that we can utilize these to participate in moves that are going to be way cheaper for us. All right. So instead of just buying 100 shares at 13.50 here on Tilray, we can buy a $14 call option for $100. All right. And if we get a dollar move in here, then obviously we're going to go up 50 cents. But if we get a dollar move in Tilray, we're going to go up obviously a dollar, but it's going to cost us a whole lot more to participate in there. It's only going to cost us $100 here to gain $50 on a dollar move, or it's going to cost us 13 here for Tilray on a $100 move to gain that $100. So options are a cheaper way to kind of play everything and participate in the markets, but there is too many outside factors in here when we are playing to really know what we're getting. All right. That sounds kind of dumb, but that's kind of the best way I can explain it, because we have outside factors such as time and volatility. Those are outside factors. Those are not built into this options price. All right. So this options price here is all extrinsic value. We know what intrinsic and extrinsic value is. So if Tilray doesn't go above 14, then this option is worthless. That's all it is. Who cares about the implied volatility or what's going to happen? If it doesn't go above 14, it's worthless. Okay. So we have the IV that's always going to be contracting and expanding. We have Vega that's always going to be changing with the IV. We have our Gamma, which is going to be the rate of change of our deltas. We have the delta changing. That's going to be with the stock price. But really, we have too many outside. Oh, we have theta as well. So as far as time, we have our expiration date right here, August 20th. So theta was always going to be playing either for us or against us. So it's a bunch of outside factors. Whereas stock, everything is built into that price. We more or less have a good idea of the health of Tilray by what this stock is currently trading at. Okay. And options, we really kind of don't. And as you can see here, we have earnings coming up in Tilray on July 28th. And you can see the IV is super high in here for this earnings expiration cycle. So even if we do get a run up in Tilray, even if we do get some speculation in here to the upside or the downside in your July 30th expiration, that's going to contract at some point and that's going to revert to the mean. Whereas if you're in the stock, that if you do revert, it's not going to hurt you as bad as it would. You have a big down move in here. You have some IV sucking out of here. it's not going to hurt you as bad, comparatively speaking. It's going to cost you a whole lot more because you have to get long stock. Options are just a cheaper way to gain leverage. But with those big swings and those outside factors, that could come back to haunt you. So what we can do is that a lot of people utilize short puts and stuff like that to actually get long Tilray. So they don't want to buy Tilray here at 13. They'll sell the 12 down here for this expiration. They'll go to August 20th. They'll sell the 12 here for 59 cents. And there's no risk to the upside. Tilray keeps on going up. You made 59 cents. Tilray pulls back below that $12. Well, now you're just going to buy Tilray at 12 rather than 13.50. You didn't want to buy at 13.50 anyway, right? That's kind of how you can utilize options. But really what it comes down to is basically everything is always built into that stock price. You can kind of have a good gauge on everything with that stock price. And with options, there are so many other outside factors. And that's kind of based on just its pricing model, that you don't really know what something is worth because you're just looking at the speculation. Obviously, stock can do the same. Examples: AMC and GameStop. All the big boys were shorting those two stocks for a reason. And look at what the CEOs have done ever since they had that big run up, right? Nothing. They didn't change their business model or anything. No reverse splits, no nothing, no sort of anything. So there's a reason that everybody was shorting them, and there's a reason that they're going to fade out and they're going to slowly revert back to what they're worth. And that's because they are bad companies. Hedge funds, when they short companies that much, they're usually right. And there's a reason that they were shorting AMC and GameStop that much. So those are the two probably outliers, the big outliers of stocks trading in overvalued territory. Obviously, with the whole market being where it is now, there's probably a lot more. But overall, if you look at AMC and you say, "Oh, AMC is worth $40," actually, it's probably not. It's probably worth about 15. And you look at GameStop, "Oh, it is. You know, it is worth around 180, $160." No, it's probably not. It's probably worth about 30. Those are probably the two outliers as far as the health of a stock and the health of a company and guidance and all that being built into the stock price. But more or less with the stock price, we can kind of know everything that's about that company, everything that the health of that company, guidance, etc. Whereas options, there's so many other outside factors, but we can utilize these options for cheaper participation plays. So it's kind of easier on us. We can have more leverage, and then we can utilize those options to eventually get long that stock, etc. So that's kind of just basic overview of the differences just between playing stocks and playing options, kind of things to look at and worry about before you're kind of diving in just straight to options or just straight to stocks. So you kind of have to think and kind of weigh your options, for lack of a better term, no pun intended there, what's best for your risk profile. Okay, guys, thanks for watching. Make sure to check us out on our social media. We have attached the links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.